Bitcoin has surged back above $65,000 following a reported peace deal between the US and Iran. This unexpected rebound has sent ripples through the cryptocurrency market, prompting questions about its implications for investors. Here's what you need to know. The recent announcement of a peace deal between the US and Iran has sent shockwaves through global markets, leading to a surge in Bitcoin's value. This pivotal moment raises an important question. Will Bitcoin sustain its recent gains in the wake of shifting geopolitical dynamics? The context of the agreement lies in years of tension and economic sanctions that have historically influenced global oil prices and international trade. Analysts suggest that the health of the cryptocurrency market hinges on sustained inflows into exchange-traded funds, or ETFs, along with continued buying interest in major altcoins. Historically, peace agreements have often resulted in increased investor confidence, which can bolster risk-on assets like cryptocurrencies. However, the potential for volatility remains high. If the peace narrative falters, or if negative macroeconomic indicators arise, traders may quickly pivot, resulting in significant sell-offs. The cryptocurrency market is particularly sensitive to external influences, and geopolitical tensions can trigger rapid shifts in sentiment. Market participants are advised to closely monitor Bitcoin's price action and the overall trading environment in the days ahead. The implications of this peace deal extend beyond immediate market reactions. A stable geopolitical climate could encourage traditional investors to explore cryptocurrencies as a viable asset class, potentially leading to greater adoption and integration into mainstream finance. Conversely, any resurgence of tensions could reinforce the skepticism surrounding digital currencies, prompting a retreat to safer assets. As Bitcoin navigates this critical juncture, the future of cryptocurrency investments remains uncertain, yet filled with potential. The ongoing interplay between geopolitical events and market dynamics will be crucial in shaping the landscape of digital currencies. Investors should prepare for rapid changes, as the coming weeks could redefine Bitcoin's trajectory and the broader crypto market's future. The road to today's Bitcoin rebound has been shaped by a complex interplay of geopolitical tensions and market dynamics. In the weeks leading up to this event, cryptocurrency markets had been reacting to a variety of macroeconomic factors, including increased institutional interest and the fluctuating appetite for risk among investors. The previous month saw rising uncertainty, with analysts highlighting ETF flows and institutional buying as key drivers of market behavior. However, the situation escalated as geopolitical tensions between the US and Iran intensified, causing many investors to adopt a cautious stance. The unexpected announcement of a peace deal on June 16, 2026, provided a sudden catalyst that changed market sentiment almost overnight. This shift is reminiscent of previous instances where geopolitical events influenced market prices, yet the current environment is distinct due to the growing recognition of cryptocurrencies as macro assets. As Bitcoin surged, it became evident that traditional investors were increasingly viewing digital currencies as a hedge against geopolitical instability. This perspective marks a significant evolution in how cryptocurrencies are perceived by the broader financial community. The volatility witnessed in Bitcoin's price reflects a broader trend where traditional financial metrics are increasingly intertwined with global events. Analysts note that the correlation between Bitcoin's performance and international relations suggests that digital assets are becoming more sensitive to global developments. Looking ahead, analysts suggest that the Bitcoin rebound may signal a new era for cryptocurrencies, where they are viewed not just as speculative assets, but as integral components of diversified investment strategies. As institutional adoption continues to rise, the integration of cryptocurrencies into mainstream finance will likely accelerate. This evolving landscape emphasizes the importance of geopolitical stability and its influence on digital assets, suggesting that future developments in international relations could yield further opportunities or challenges for investors. Investors should prepare for a landscape where cryptocurrencies are critical barometers of economic and political health. The recent rally in Bitcoin, triggered by the historic US-Iran peace deal, underscores a significant turning point for both investors and the broader cryptocurrency market. This agreement marks a potential shift in decades-long hostilities, fostering an environment of optimism. As tensions ease in a region long characterized by conflict, many investors are increasingly viewing Bitcoin as a safe haven asset. This shift in perception reflects a growing trend where geopolitical stability fosters renewed interest in higher-risk assets like cryptocurrencies. Bitcoin's reputation as a hedge against traditional financial systems and geopolitical uncertainties has garnered attention, especially in the wake of the peace agreement, which analysts believe could stabilize not only the Middle East, but also global markets. This newfound stability creates fertile ground for capital inflows into cryptocurrencies as investors seek to capitalize on potential growth. Market analysts suggest that this could lead to a surge in investments in crypto exchange-traded funds, ETFs, which have gained popularity among mainstream investors seeking exposure to digital assets without the complexities of direct ownership. The implications of this rally are profound. As Bitcoin's price rises, it often triggers a cascading effect across the cryptocurrency spectrum, benefiting altcoins and other digital assets. This interconnectedness means that the average investor must remain vigilant and informed about geopolitical developments, as they can have immediate repercussions on market dynamics. Additionally, the potential influx of new capital into the crypto space may lead to increased volatility, presenting both opportunities and risks for traders and long-term investors alike. Looking ahead, the outlook for Bitcoin and the broader cryptocurrency market appears optimistic, provided that the peace deal holds and further geopolitical tensions do not arise. The prospect of increased institutional adoption, combined with favorable regulatory developments, could create an environment ripe for sustained growth. As traditional financial institutions increasingly engage with digital currencies, the crypto landscape is evolving rapidly. Investors should prepare for a more dynamic trading environment, where Bitcoin's performance becomes increasingly intertwined with global events. Navigating this financial frontier will require not only awareness of market trends, but also a keen understanding of international relations and their potential impact on investment strategies. On June 16, 2026, Bitcoin experienced a significant rebound, reclaiming the mid-$65,000 after news broke of a confirmed peace agreement between the United States and Iran. The announcement, which emerged around 10 a.m. Eastern Time, saw Bitcoin touch approximately $65,000 before briefly spiking to $122,800. This surge coincided with a broader market rally, as altcoins like Solana and Dogecoin outperformed Bitcoin on a percentage basis. The reported agreement is seen as a pivotal moment, especially given the heightened geopolitical tensions in recent months. Investors reacted positively, signaling a shift in market sentiment towards riskier assets. The backdrop to this event includes escalating conflicts in the Middle East and economic sanctions that severely impacted global markets. The U.S.-Iran tensions had previously led to uncertainty in various sectors, including energy and technology. The peace agreement not only alleviates immediate fears, but also opens the door for potential economic cooperation, which investors view as a catalyst for growth. Bitcoin, often seen as a hedge against traditional economic systems, has been increasingly influenced by macroeconomic developments, and this event exemplifies that trend. The impact of this news on the cryptocurrency market was profound. Unlike previous Bitcoin price movements that were isolated incidents, this surge is particularly noteworthy as it is driven by macroeconomic factors rather than merely technical trading signals. This underscores a growing trend where Bitcoin is increasingly viewed as a macro asset, influenced by global events rather than just its inherent technology or use cases. The positive reaction from investors indicates a renewed appetite for risk, with many reallocating funds from traditional stocks to cryptocurrencies. Looking ahead, the outlook for Bitcoin and the broader crypto market appears optimistic. Analysts suggest that if the peace agreement leads to sustained economic stability, Bitcoin could solidify its position as a mainstream asset. Furthermore, as institutional investors continue to enter the market, the potential for Bitcoin to be integrated into diversified investment portfolios increases. This evolving landscape could redefine how cryptocurrencies are perceived and utilized in a global economy, increasingly shaped by geopolitical dynamics. As such, investors should remain vigilant and prepared for potential volatility as these developments unfold. As we watch Bitcoin's trajectory in the wake of the peace deal, what do you think will happen next? Will this rally hold, or are we in for another market correction? Share your predictions in the comments and subscribe for daily deep dives.